Hello. Recording. Cool. It's recording now. So, okay, trying to get used to a new interface. Pain in the you know what. All right. I don't know how many people are here.
Just three. Just three right now.
Yeah. Yes, we'll wait.
Let's send a key message to remind.
You mean through the Skype?
Yeah.
Okay.
Or send the link again just in case. Remind.
That's a good idea. I had to scroll back to find the link.
Trying to figure out where the link is. Troubles. No, I don't have the. Okay. Get it from here.
Hey Deborah, can you see Raji's screen? Because I don't see anything. I just see a blank screen.
Yes, I do. I see his screen.
Oh, okay. Don't have maybe it needs host to disable participant screen sharing. Okay. So why I can't see the screen? We hit the view standard. Full screen.
How about now?
Oh yeah, I see it now.
Okay, sorry, I had it on pause. Without realizing it, of course. Okay.
Hi, Ken.
It's interesting. I can't see the list of participants. Why? There we go. Okay.
Hey Ken, how you doing?
Ken can't hear you. Looks like you're muted.
Mm-hmm. No, he's muted. He himself is muted.
Mm-hmm.
Okay. Give it a few more minutes. All right. First time for everything. Hey, Ken, are you there? Can you hear me?
Yeah, you can hear me now, right?
Yeah.
Okay, I had to figure out how to do this.
I'm in the same boat as you. I'm still learning this interface.
Well, I'm not familiar with Zoom too well.
Right.
I've been with Kurt a few times, but it's in the PIP Club, but it's set up a little different. Anyway, everything's good.
It's just the 4 of us anyway, so I don't know how many people are going to join.
A lot of them are busy, but you're recording, so.
That's why we don't have a large crowd, huh?
Sometimes we do, sometimes we don't.
It's 10:05. I don't know who else is going to join, so let's get started. Santiago's here. He's my co-conspirator on this anyway. So basically what we are doing on this is the filter setup, like the FSS filter. We're showing it on the screen up here as well as below down here. There are 2 separate indicators. This one is called the MACD Ozma on-chart multi-time frame version 2. And the inputs for this one, it's a 4-hour candle. So it's a 4-hour time frame. The settings are 3, 25, and 2, linear weighted, and quadratic interpolation. Can't talk. This smoothens out the indicator. Otherwise, you would get a very jagged indicator if you do linear. And the colors.
The candles?
No, the line itself.
Oh, the line. Okay, sorry.
Won't be very smooth if you don't use quadratic.
Okay.
In the colors, the first 2 are the candles. The second 2 is the line itself, the color of the line. And the last 2 are the arrows. So these arrows represent the 4-hour change on Ozma. So every time the candle color changes, you'll see this arrow. The other one I have on this is the daily filter. And on the daily filter, I don't have the candles, but I have the line and the arrow. Okay, makes sense?
Uh-huh.
All right. Now at the bottom, I have an indicator called the SCMTF Ozma.
Yeah.
And it's the 325.2 weighted price and 4-hour time frame, daily time frame, and weekly time frame. This is the 15-minute chart. Let's do the 15-minute chart. On the 15, I have the 30, H1, H4, and daily. So those are basically the settings. Okay. The way we scan is we look for the high of the day or the low of the day. And what we're looking for specifically is based on the daily filter color at the bottom. So if this is blue, we are looking for a low of the day to get into the trade. And the low of the day is indicated by the H4 when it changes from red to blue. So this is basically what we're looking for, this condition.
Yeah.
Okay, so this signifies that we've established a low of the day, which is right here, but came in on the H4 here. On the H1, we get the low of the day and the high of the day for the session. So in this case, we had the low of the session, right?
Got it, yeah.
And then this one is the sinking Ozma. So if all 4 are synced and this has a fresh, then that's our entry. So here's our entry right here.
They're all together, yeah.
Right, and so from here, we stay in, or at least I stay in, till the H4 changes color again. Or I get a 3 ball up here, So it all depends on your target. These targets are set based on your personal preference, okay? So I think Santiago gets out on the change of the color on the session itself, which would be right here. Or you're waiting for a high to establish itself. And that would have given you 50 pips. So the system is as simple as that. It doesn't require too much thinking.
Right.
So what he and I do basically before the Asian session is just go through each pair. And I just mark that time frame that we get together. That's 3 o'clock. No, 2 o'clock. This is the time that we get together at night, and then again before the London session, which is at 2 o'clock. See here somewhere. Yeah. So these are the 2 times that we do the evaluation and do something like this. Let me show you our spreadsheet. Can you see the spreadsheet?
Yeah.
So basically, the weekly, daily, and 4-hour down here. You know, what settings they're in, and I do the weekly for the extremely long trend. Okay, so if on the 1 hour, the weekly and daily are in sync, we know we're going to have a good trade for that day. So like here, they came into sync over here. We had the high already established. All I'm looking for now is a 4-hour to get into sync and I get into a trade. I don't know if that makes sense to you guys, but right here, there's a 1 ball retracement was done. Get the arrow, you drop it down to the 5. And again, we're looking for a fresh, and that's the entry.
Wow. That's on the 5, right?
That's on the sell.
Yeah.
And the swing point is the stop. So your stop is 20 pips. That's a little high for me, but in this case, you know, it's just illustration purposes. And you go back to the 1 hour, and here's your trade. Didn't give you much.
Hello, Roger?
Yeah.
Yeah, I just want to emphasize on something. Go back to your 5-minute chart or 15-minute chart.
The 5 minutes is where I was taking my entry.
Okay, if you notice, that's the beginning of the New York session.
Yeah.
Okay.
Most of your trades are going to be at the beginning or somewhere within the session. So if you was anticipating the market to pull back and you're waiting for the continuation, you most likely is going to happen in the Asian session, London, or the New York session.
Correct.
So you're expecting the New York session to establish a high, and once you see that, that should give you a little bit more confidence that that pullback is over, and you're at a high point in a session. That's a higher probability chance that the market's going to turn around and try to make a low for the session.
Right. So the MTBF snatcher, which I sent in the chat yesterday, is a 3 ball, which is further confirming that it's a high. Okay, but a trade is not taken right at that. This is a 1 hour turnaround. 1 hour is also the multiple confirmations here. Though I didn't illustrate the confirmations. You can see there's a 3 ball. This is a fresh, and everything's lined up. And then once you take the trade, you can either stay on the 5 or take the 2 ball exit, which is one way to get out. It gives you 30 pips. So it's a 1 to 1.5 risk to reward. And like I said, for me, 20 pips is a little high on a 5 minute. So I probably won't take this trade. I don't know if that makes sense to you guys, but I would come here and say, okay, I have established a low. I have a 3 ball. These two are not matching, so I'm looking at the 15. I drop it to the 15 because my trade is on the 15 at that point. these lines. So you understand why I'm dropping to the 15, right? Because the weekly is not in sync. So I'm just doing the daily 4-hour sync. Drop it to the 15 and say, okay, I have the high, I mean, low of the day established, low of the session is established. Here's my 3-ball, here's my sync. I can go drop it down to the 1 now and look for a fresh. And there's the fresh right there. And here's my entry. Here's my stop. The 10 pip stop. Go back to the 15. And you can take your exit along your anywhere around here. Here's my exit. $120 some pips. So this doesn't require too much thinking. It just make sure you have the high of the day or low of the day based on what you're looking for on the daily. And once you're patient enough to wait for your trade, you can, if you're on the 15-minute chart, like here, the daily and 4 hours, 15-minute chart, you drop it to the 1 minute, take your entry over there on the sync. Or if you're on the 1 hour, you drop it to the 5 minute and take the entry on the sync. I mean, I don't know what else to say. It's as simple as that. Any questions?
I get the setting for the Asana on the
Which
4
one,
hour.
this one or this one? They're all 3, 25, and 2.
The oscillators. What was it again?
I'm talking about for the top or the bottom?
The bottom.
3, 25, and 2.
Oh, 325 and 2. Thank you.
Yeah, that's weighted price. It's not close. Okay, just to make sure you have the right setting.
Oh, okay. Weighted. Okay.
Which is what smooths it out this hour. If it was just close, it would be very jerky.
Mm-hmm.
Anything else I can show you?
Can you talk about your exit?
Yeah,
a little bit.
My exit is when the high, the opposite color shows up on the 4 hour. That means if it was the low of the day here, that means established a high of the day or was looking for a high of the day. So on this bar, and let's expand it a little bit. This is a bar that changes colors, right?
Right.
Right here. So now I can see this a 2-ball retracement. I can either wait for the retracement to finish and take the 3-ball, or I can just take my exit. At this point, it's 122 pips, so why risk it?
Mm-hmm.
Yeah, and sometimes if I have things to do, I'll just at the end of the Euro session, I'll just take the exit over here. I won't wait for anything. That's still 115 pips. This is your discretion. I have goals for the day as to how many pips or how much money you want to make. My goal is really $300 a day, and so I adjust my lot sizes that way. My stop losses usually are between 10 to 15 pips, so I know what my risk is.
Yeah,
and that's the reason why I said on the previous trade on the 20 pips I wouldn't have taken the trade because the risk is too much for me.
Right. I entered the Euro Aussie this morning. Can you go to the current time frame? And what I did is I only took 19 pips. I had my take profit at
you went long,
20.
Right?
Pardon?
You went long. You watched.
Yes. Okay. I went long at 5 a.m. 5:31 actually, to be precise.
Eastern?
No. Pacific time. So 3 hours minus Eastern. So 8:31 Eastern. we'll do 8:31
somewhere
Eastern.
in here.
Mm-hmm. And I took 19 pips out.
Okay.
So I would have loved to have stayed in, but I get nervous.
Right.
But if I had the rules like you do, like let's say even if I had taken the 1 hour color change,
Mm-hmm.
but you know, right there, yes. But that takes a whole hour. That bar is a whole hour. So
this is on the 15-minute.
oh, okay.
So that's why it's a little quicker.
Okay.
See, if the reason this is on the 15-minute, like I said, if I look at the 1 hour chart, the weekly is red. So this is not in sync. So I would not take the 1 hour exit. I would be on the 15-minute chart. This is in sync. And as soon as this gets out of sync, I would exit. That's the difference. If the weekly and daily are in sync, I'm staying on the 1 hour chart.
Okay.
But anyway, on this system.
Hey, Rajiv.
Yeah, give me a second. Give me a second. The low of the day was established here. This says the low of the day is established. It's right here.
Okay.
Okay. Now, everything is in sync, but it's not a fresh on the 30, right?
Mm-hmm.
So if you take a fresh on the 30, right there, you know, when it starts to get to blue, and you drop it down to the 1 minute. Your fresh on the 1 minute happened here, right?
Right.
Your entry is here, and your stop loss is here or here. This is here. Now this is a wide stop loss. Oh, it's only 10 pips. Okay. So this is a 10 pip stop loss. You go back to the 15 and say, where's my exit? For me, the exit is here. And that's 50 pips.
Yep.
And I don't have to look at anything else after that. I'm just looking at this. Or, well, I'm not even exited yet, but I know I got a 3 ball. And I don't want a deep retracement coming back at me. So if the 3 ball was here, my exit would have been on this. Because this thing can move, right?
Right.
So this would have given me my exit for 50 pips. And I went, 50 pips.
Mm-hmm.
That's like $350 in a standard lot. I've made my picks for the day. I shut my computer down, go do what I need to do.
That's perfect. That's great. And that makes it stress-free.
Yeah. Hey,
sorry, Santiago, go ahead.
Hey, Deborah, what kind of helps me out is knowing that each session is going to give you a high and a low. And because the 1 hour is coming off the low right before the 1 hour filter, it's saddling right before the New York session.
Yeah.
That gives me a good confidence that we're starting at a low in the New York session, and we're going to be looking for a high. So as the market is moving in that direction, that keeps me that allows me with a little bit more confidence to stay and just wait for my filters to change, to let me know that the high of the session is starting to be established.
Right. So you're trading all of these,
correct,
basically rising bars.
Correct.
I mean, I drop it down to the 1, but you don't technically have to. You know, if you have a little bit of more tolerance than me, just take this. Here's a trade on the 15-minute itself, because it's all fresh. All right.
Yep. Yeah. That's great.
And then if your exit even here is your exit, that's still no matter how you slice it, 54 pips.
Right.
No.
Wow. I like that.
When Santiago first brought this to me, I said, hey, this is too many squiggly lines, too much. Because I think you still have the 8 and 12 and 16 and whatnot. I like to keep it simple, you know.
Yeah.
So I don't I mean, I don't really need these lines either, but it's a good confirmation that everything's pointing in the right direction, that the daily's moving up and the 4 hours moving up. So, you know, it gives me confidence to stay in the trade. None of these have turned. But then this here, the 3 ball, is going to turn around and the 1 hour is turning around. That means establish the high of the day here.
Yeah.
And I don't want to take the risk of a deep retracement. So I just take my exit. That's what I did on my GCAD yesterday when I got 48 pips. It went to like 70 pips, but I don't care. I made my 48, I'm happy.
Yeah.
So like today's trades, the euro yen. Let's look at the 1 hour. It's out of sync. So I dropped to the 15. 15 is also 15 is also out of sync, but it was in sync here, right? In the Asian session. So here was your high of the day established right there. It was also the high of the session, right?
Yep.
Mm-hmm.
And your fresh was here and it crossed over to the 0 line. Correct?
Yep.
So here's your entry. This is what I was sending in the chat that, you know, I missed this entry. Most of my second entry was lowered to somewhere here. And I still missed my freaking entry. I was pissed. I wasn't happy. But here's the exit. 90 pips, right? Oh, 50 pips. But if I drop this down to the 1 minute chart, let's bring it over. Come on. Something so hard to grab. My entry is right here. Gives me a better risk reward ratio. Exit here. I mean the stop loss. And then I have my entry here. Fresh after this 3 wall, which would be here. That's my second entry. Third entry here. And if I want a 4th one here.
Yeah.
Hey, come on. Let's mark it with the lines. Here's the entry. Another entry. 4th entry. And then you go back to the 15. I took my exit here. 43 plus 45, 88. 48, 88 and 48 is 136. And 57, it's like almost 200 pips with no additional effort.
So you have confidence entering another position because everything is still in sync and you're waiting for that 4 hour to
Correct.
change color.
Correct.
And you enter a new position when the 30-minute or the
1 minute. I'm on
the 1
minute.
minute. Okay, the AO or the, excuse me, your top one.
Yeah, it's a 5 minute.
Right. Okay, it's a 5 minute. And when that crossed over or changed color, you felt comfortable adding
Yeah, I get
on?
either a saddle
Uh-huh.
With everything syncing, like this one wasn't an entry right here.
Oh,
This
it
is,
was not an entry because it
Yeah.
didn't sync. Okay.
correct. This one wasn't an entry because this didn't sync.
Right.
This technically is not an entry, right?
Uh-huh.
So you can take that out.
Okay.
So instead of 200 pips, you made 150, 160 pips. That's what Santiago posted, right? 166.
Wow.
So it's still following the FSS principles. We're just not using the Mayo and the AO.
Yeah.
It's just a straight filter on multiple time frames.
Okay. I really like that. Simple is good for me. I mean, it's complex. I mean, like it's difficult to maybe get it all set up, but it's simple. Once you have everything set up, it looks terrific.
Right. Like I said, there's not too much thinking involved. And as Santiago said, you're looking for the high of the day or the low of the day, or the high of the session and the low of the session. Once the high is established here, you're looking for a high of the session. You can stay within
momentum
the session
away from it, yeah.
And then you come in here, the 2 o'clock candle is here, and you had another high of the session, and you're taking a trade to bottoms. Yeah. You don't have to take the entire trade. You can stay within the session and trade within the session, get what you can. So that's another way to do it. I just like to stay in it till my 4-hour turns. That's just my way.
Yeah.
All right.
Wow.
If you look at the pound yen, which was the monster trade today, or even yesterday, same thing, right? Here's the high of the day established, high of the session, and it's the end of the session, but then you drop it down to the 1 minute. And here's your fresh. That's your entry. And you go back to 15. Here's the exit. How much is that? 67 pips. 67 pips on a standard lot. It's like $600 on pound yen.
Wow, that works.
Yeah. I mean, if you want add-ons, there's an add-on right here, right on the 15 minutes itself. It's right here. On the 1 minute, you get multiple add-ons. Again, here's an add-on right here. And the snatcher helps you, because it gives you the retraces, like 2-ball retrace, 1-ball retrace. You just look down here, start a thing. 2-ball retrace, here's another entry.
Hi, Raj, how are you?
Hey, how are you?
Good. Just I want to maybe I'm noticing something with your the system of the bars. So you have like a retest, okay? So you can, even if you don't have any signals in your filter or mail, the 1 minute, I think was the 1 minute. You come back to the last, yes. So you see at each time you have a retouch, a pullback.
Yes.
So yeah, so you can really, because you have a really tight stop loss. I noticed when you set it in the euro yen, and that's great because you can add on, because he's still going in your favor and you add on a positive position. So, and that give you more pips, of course. Right. And also you can stay longer because you can maybe make a break even, okay, between the first position and the second position and let it go. And let it go is what I did, for example. It's not the same entry I did in the pound yen, but then he pulled back, but I let it go. I set my break even, and I knew that it goes to my to the round number. Then you can target any because you have your goal for the day, maybe pips goal, maybe dollar goals, I don't know, but I'm trying to take all the move because simplicity, as I just looking supply and demand zone in the 1 hour, Right, that's right. So that gives you some good idea of momentum is reversing, okay? Yeah. And that give you confidence to stay longer in a trade and not be in front of the computer all the time. You know, so you let it go and that's it.
Yeah, simplicity is a swing trading system, right?
Right.
It's not a scalping system like FSSAC, right?
Right.
So in simplicity, it's like this is a simplicity system, which Rafael is talking about. I don't use the arrows. I have the arrows because people want to see the arrows on the simplicity. I'm just using the zones.
Yes, okay. So do I.
Right. So when I get a 3-ball at the top of the zone, like here, right? I can't draw a vertical line on simplicity, so I'll just draw a rectangle over here. And then I drop it. I'm on the 1-hour chart, so I'll take my entry on the 5-minute.
Okay.
Let me just get there. So what's happening at this position here? First of all, the 4-hour has told you that the high of the day has been established. The middle one is a 4-hour. Okay.
Okay.
This is the 4-hour filter. So I have the high of the day established. Now all I need to do is go on the 5 and say, okay, what am I seeing here? The high of the session has been established. The high of the day has been established. Now I'm just looking for an entry.
Yep.
Right.
In here somewhere, right?
Yep.
Now, this is not a fresh on the 30-minute. So I can drop it on the 1 minute and see if I can get a fresh. And I get a fresh right there.
Right.
That's my entry.
And it never goes back to your stop because your stop is going to be in the high. Yeah.
Yeah.
Perfect. Mm-hmm.
But whatever the nearest swing point is, right? So this is a 10-pip stop. If I can't afford to take a 10-pip stop, I shouldn't be trading. And then I go back to the one hour and say, okay, I got into the top. Here's my target. It's almost there. It's like 6 pips short of my target, but I made 200 and some pips.
Yeah,
I can walk away from the trade at that point. And
right.
It's reset.
Right.
You know, and in the meantime, I can take add-ons, right? I mean, 5 minutes will eventually give me a sink, which happened here, right here. Give me a sink, which happened here. Another sink happened here.
Right.
And then I did a little bit of retrace. And then it started sinking up again, right here.
Yeah, I think I took it there.
Yeah.
Pound yen, yeah.
So, you know, on a pair like the pound yen, you're going to get between 150 and 250 pips on the simplicity system, the swing.
Yep.
Right.
Yep.
And if you do 2 or 3 trades, with add-ons, you lower your lot size, obviously, because the risk, you know, your management, money management has to be tight. Because the swings can be high, you know. But if you take 2, let's say 3 trades, you multiply let's say the 150 by 2.5 or 3, and you get like 500 pips, 450 to 500 pips.
Yes, 1 to 10, 1 to 8 ratio. Right. So that's.
Right. And this is this was unusual last 2 days, but 500 pips in 2 days, you've done for the month.
Yeah. Right. Right.
Yeah, $5,000 on a standard lot.
And what I notice is what I'm posting, and I know you know it, it's like some diversion or conversion in those supply zones. Look how that give you some signals in advance, like 2 to 3 days ago, when you have in the 4-hour, I think your filter in the bottom.
Yeah.
Yes.
This one's a 4-hour. This is the 1 day.
Okay, the daily. Yeah.
So the divergence, the 4-hour didn't show the divergence, right? Because it crossed over the 0 line. Here's the divergence that's happening right now.
Right.
So this is going to turn around with the 3-ball right here.
Yes. Yes.
So as soon as this happened, this blue bar happened, you're starting to look for an exit. You're tightening your stops, stop, and here's your exit.
Right.
Like I said, there are multiple ways. I mean, this 220 pips, but there's multiple ways to trade the system. The idea is to have the entry, you know, that you don't have to think much about. After that, what you do with it, target-wise, profit-wise, whether you want to do swing, whether you want to scalp, maybe you don't have the tolerance to sit through through 3 or 4 days to take your profits like here, you know, like Simplicity has an entry here. I mean, they're not using any of this, so their entry is right here.
Yeah, if we find 2 or 3 trades like this at the beginning of the week, we can let it go for 2-3 days, and you are all set for maybe for the month, maybe for the week. But in the meantime, you can keep going scalping and doing your trading as you use. But if you have 2-3 trades like this with 1%. 0.75% risk, that it give you 1-to-8 ratio. You pass any challenge you want.
Well, this 1 to 20, right? Because it was a 10 pip stop loss.
Yeah.
And we had 220 pips, so 1 to 22.
Yeah. Hey, hello.
Yeah.
Yeah. For those, like, if you don't want to stay in a trade long term, but you want to get the same benefit and kind of take your profit as it goes. What, you know, as the market is moving up and it makes a high for the day, you get out of that market, and on the next day, your thought is, if you know the market is going to continue to go up, is the next day I'm getting back in at the low of the day, and then letting it ride.
So every little pieces,
So every day you know that if you know the market is going up, you're only looking for the low of the day to get back into that market in that direction. That still give you all your pips, and you know, for those who don't like to stay in a trade for a long time, gives you the flexibility to get in and out, but still manage to get the same amount of pips.
Correct. Yep. And I use the MTBF snatcher retraces also to help me.
Okay.
You know, get in, stay in or get out. You know, if I don't want to sit in for the retracement, I just get out when the balls appear, wait for the retracement to finish and get back in. So that's another way. I mean, it's really up to the individual, their makeup for stress levels and things like that, risk tolerance and all that, as to how you want to use whatever system you have. The whole thing is to have a good entry. If you have a good entry, you can make any trade successful. What I've been lacking in the past is that the entry has been iffy. You know, trying to match 3 different time frames by flipping through charts and then stressing out, pulling your hair out. You know, this makes it simpler for me to know which time frame I want to be trading on, and then which time frame my entries are on, and then where my exit is. That's all I need to know. Yeah, there are going to be some losing trades. I mean, there is no such thing as a 100% system.
Of course.
You know, but you're minimizing your losses 10 pips, 15 pips. And you're maximizing your profits to 50 to 100 pips, you know.
Yeah.
Even if you do a 30% win ratio, which
what is important, guys,
much more, you're still going to make money.
Yeah, what is important, guys, to know that, as you say, not all trade will be winners, but what is really important is to manage risk management. Right. So I'm using this panel. I think there's some website also that you can calculate the risk, but try to take off stress to calculate your risk in those trades. Today, I did 3-4 trade. I went to the doctor. I drive my son and everything. I was stressed, and I made almost 3% today.
Yes.
Because I knew already that my risk was maximum another 3% in 4-5 trades.
Right.
You know, so I know that if it goes against me, I'm not going to lose more than 3%. So that is give you a lot of
yeah, I mean, look at it this way. If you want to make, let's say 20% a month, right? I'm just taking a number out of the air, right? So that means basically 1% a day, correct?
Right.
You shouldn't be losing more than 2% a day, because it'll take you the next 2 days to recover what you lost.
Right.
And on those days, you might make more than 1% or whatever. But if you manage your risk to 1% a day, you can still achieve your 20% a month.
Right. Right.
That's the point, you know. So whatever your risk, what do you call it, tolerance is, if it's 3% a day, then make sure you get out, but make sure you're able to make 6% in the next 2 days. You know, 3%, 3%.
Right. Right.
Otherwise, you know, you'll end up negative every month.
Well, my trading way is like, you know, like simplicity, 30, 40, 50 pips away.
Yeah.
So
I mean,
they are big, and that is 1%. Yeah. So and I know the setup. The setup is good, and I'm entering in 4, 5 good setup. They are not going to be all winner, but also they are not going to be all loser. And if they are all loser, it's like my tolerance, as you say, is 3% a day. But if you have knowledge of the setup, of the structure of the market, and you know what are you looking for, yes, and you can have the tolerance of risk. I'm very comfortable with 3% in 6 trades, in 6, 7 trades. So I'm like 0.5, 0.75 risk in each trade. So I know I can open.
You manage your risk by your lot size. I mean, if your stop loss is 90 pips away, you have to calculate your lot size based on that to see what your 1% risk amounts to, and then use that. At that point, you don't care if it's 90 pips stop loss. Your risk is managed.
Right. Yeah. And another thing that I've noticed, you know, so some people are not too in tune on how to read the structure of the market.
Yeah.
But, you know, the lows and highs create the structure of the market. So technically you are trading the structure of the market without even knowing that you are establishing the structure of the actual market. Right. So that's one of the things that I like, is that I don't have to learn, you know, how to restructure, because the highs and lows are the ones that creating the structure. So inadvertently, I am.
When you're saying break of structure, like this is a break of structure right here. Is that what you're talking about?
Well, I mean, just the overall structure of the market. You know, the highs and lows, and you know the different patterns that the market creates.
Okay.
You don't really have to learn all that if you find the highs and lows, because those highs and lows are really the ones that creating the structure of the market.
Right. I mean, I don't want to talk about the order blocks and stuff like that, but that's another way to enter. My euro yen trade this morning was based on an order block, and it didn't quite touch my order block. That's why I missed the trade, but that's another story. The other thing, Rafael, you can see my red arrow here.
Mm-hmm.
This is the daily filter turning over.
Okay.
Okay. So this is a 4-hour filter turning over here.
Okay.
If these two are in sync and my simplicity arrows in between, and I have a retrace here, here's my entry right here.
Yes. Okay.
And my stop loss is right here.
Perfect. Yeah.
You see what I'm saying?
Yes. Perfect.
And that way you can calculate from that. Like here's the entry. Here's the this is what let's say. So 16 pip stop loss on the 1-hour chart. I can of course drop it down to the 5 and take a better entry. But from here depending on the next turning point, if I get out over here, it's 150 pips.
And even if you set your stop loss at the outside of the, yes, right there is, you have a 1-to-1 ratio.
Yeah, 64. Even more. You got 1 to 3.
Yeah.
You know, so.
And you are, and you set your stop very far away. You are, you can go away without any worries that it goes to take you out.
My point really wasn't the arrow. My point was that the 4 hour and the 1 day was
yes, okay.
And that was what was getting the momentum. Just like here, the daily and the 4 hour in sync, and then look at that.
Right.
Look at that trade.
Right.
You know, this is 220 pips, 250 pips. So I mean, I'm just showing, like Santiago said, the high of the day, the high of the session, low of the day, low of the session for trading on a daily basis. But if you want to take it to a higher time frame, like just do it on the 1 hour and sync it with a 4 hour, you know, 4 hour and daily or 4 hour and weekly. I don't have the weekly on this. If I go to the 4 hour, here's the daily and weekly. Once they get in sync, here's my entry.
Right.
Here's my exit. That's 240 some pips. If I just take it to here, it's 180 pips. I don't care about the arrows. You know, I just want my syncing to take place on the filter.
Right. I'm using same like you. I'm not taking care about the arrow, but about the structure. I like some convergence divergence in those areas, and I think we can give people opportunity to get or to be focusing some good setups for the week, even not for the day, but even for the week. So
I mean, if you do it on the 4 hour, you're going to do it for the week, right? This is double tapping the bottom right here.
Yeah.
Right. It didn't break. So if you're just using the simplicity system without the arrow, you're saying, okay, my entry is in here somewhere.
Right.
And my stops are here.
Right.
You're not using the filter, but
I'm not using the 4 hour. I'm using assurance
that you're in the right direction.
Yeah. I'm not using the 4 hour. I'm using the 1 hour. The 4 hour maybe is too much, but the 1 hour is like a good compromise.
Yeah. I mean, but I'm saying if you want to set it for the weekly and just walk away.
Yes.
You just set it over here and just walk away to the end of the week, and there's your trade. 175. You walk into the week. And you say, okay, here's my entry. Here's my exit.
Right.
Or here's my exit. 165 pips. Like I said, I mean, multiple ways to reduce this. I'm just comfortable like with the 1 hour. I'm not using simplicity by itself. I'm using hour charts, the plane charts. But if you're using simplicity, you can use it to your advantage too. But this just keeps it clean for me.
Yes, perfect. Actually, I don't trade in simplicity chart. I have my 1551 as always is what I know. Big for scalping and enter. And even when I get the structure, I set the pairs that I'm looking for, my scanner, and I set AO, saddle, MEO, saddle, filter cross, everything in those pairs like this. I send it to my phone and give me some.
I mean, you trade what you know. Right?
Yeah, right.
These are just helping you with entries. After that, all our successful traders, you know where to enter, where to exit. It's just refining your entry. That's it. You know, so like on the euro yen here. 15 minute. Once I missed this trade, this entry, because I wasn't awake. I was waiting for an entry over here. And I missed it by 1 pip.
Right.
Because I was waiting for the retrace and never got to my entry point. I guess it was a little too high. Would have been here, I would have gotten it. And that would have been a good 60 pip trade.
Are you using pending orders?
Yes.
Okay.
I set a pending order. I'm using order blocks basically.
Okay, order blocks.
So the order block would have been right here.
Yeah.
That's the order block.
Yeah.
And I think I came in when I tested, when I was hoping they would come back, and never did. I could have taken another entry, then it broke structure over here. Okay. I think Santiago took an entry there.
People, for you guys that maybe you don't know the concept of the order blocks, there are areas or zone of retest. The price is going to retest before going in the
direction that it wants to go. Yeah.
Yeah.
Like here's an order block right here. It tested the order block. Yeah. So I mean, I can visually see it, so I don't draw them.
For me, it's very hard. Very hard.
You have to get used to it.
Yeah. I know them.
Once you get used to the area of interest, which is what they call the order block, is the area of interest. Yeah. And even if you take it at the top of the order block, well, then it has to match what I'm doing down here. I would not have taken this trade. But this
those that are easy to watch is in the 4 hour, like a big candle, engulfing candle and goes in one direction. So that is for sure order block, and it's going to be retested before going. So you have
Anyway, on this system, are there any questions?
Not for me. I just need to get this all in my head. I'm glad that you're recording it. It's a lot of information.
Well, I mean, we went off topic with the simplicity system, but I mean, if I'm going to use simplicity, I'll still use this for my entries. Mm-hmm. Simplicity just gives me the swing direction.
Right. So, yes, Raj, how can we take advantage of this setup? How can you post it or analysis like maybe at the beginning of the week or something that the group can be focused during the week to get little pieces, or maybe to try to get.
Well, if you're going to do it at the beginning of the week, I would do it on the H4.
Okay.
Okay. And then the daily and weekly have to match.
Okay.
For it to be a potential setup, because that will give you the setup for the week, right?
Okay.
Like here, and then in the middle of the week, it'll have to change, right? Because market makers like to swing it at the middle of the week, right?
Right.
So you do the beginning of the week is a short for this particular one. I mean, if you came in on this week, you're looking for longs when they match up. So I don't know what wording I can use, but really this is right here. Let me draw the vertical line. We haven't gone to that stage yet, but you're seeing a divergence.
Yes.
But you're also seeing a match between the daily and the weekly.
Right.
So you know this is not going to go for long.
Yeah.
So you drop it to the 15. And then you say, okay, where's my entry on the 15? The entry.
That's a good question. Yeah.
Right?
Right.
So this is your entry. And you can say this is your stop. The 20 pip stop loss. And you can say, go back on the 4, the daily changed over here. Now that's a pretty large area to, but here. You made 55 pips, 56 pips. This pair is not set up to go for the rest of the week just yet.
Right.
So it might do a saddle again because the weekly is still strong. And then going back again. So I don't know. I mean, I could put something like that up, but people, if I put something in for the week, then people are going to misinterpret and are going to get lazy and just leave the trade alone and lose money.
Yeah, I'm trying to help people by looking some structure to be focused during the week, because I'm a scalper, so I cannot post my trade because I have already entered and out when I want to post it. So it's very hard, but I think this kind of setups, so they are very useful. So thank you, Raj. Thank you, Santiago, because they help us a lot to be focused in some pairs that we have a high probability potential trade. So thank you.
I mean, you also have to be diligent about the system, because you know, these things are on different time frames than the time frame you're on. So, like there are 6 candles, 6 4-hour candles in a daily, and sometimes it takes 6 candles for the color to change. You know, so it can fluctuate. Okay, so like here, 1, 2, 3, 4, 5, 6. Till the 6th candle was set, this may have been going between red and blue. So when you see a low of the day set, it's probably somewhere around the 6th candle on a 4-hour chart.
Yeah.
Okay, so even though you're saying the low of the day is set over here and it's being set over here, or it's been set earlier, it takes about 6 candles. So you have to be aware of the multiplier on this for the next time frame to take that into account. You can't just jump in and say, okay, it's turned or it's turning, because it doesn't mean anything. You can turn over here, then go back to red based on this, and then go back to blue.
Yeah.
Okay. So don't jump the gun is what I'm saying. On the 4-hour, you're doing the 1 a.m., 5 a.m., 9 a.m., 1 p.m., 5 p.m., 9 p.m. cycle. And you look at it at that point as to what the setup is. Don't do it in the middle. On the 1 hour, you're looking at it every hour, right? I mean, don't do it in the middle of the hour, because there are like 4 candles on the 4-hour, and then 44 candles on the daily for the hourly. So like this whole day is 1 daily candle. So if you look at the daily, this is 1, 2 blues and red, then blue, then red. Let's see if that's the case. Don't have the daily on this. Yeah, see. And this is where divergence is showing up. You can see the divergence happening earlier on this. So you know you're getting nearing a top because of the divergence. And then you see the top being established on the 4-hour. You can be pretty confident with the divergence that this is happening, right? Now I'm getting off topic here. It's not the system, this is more technical trading. But really, this is setting your top of the day, and it's confirmed by the divergence of the daily. So this became a good trade. I don't know if that makes sense, but
what I derive from it, if I may share this, is it's extremely important to know the high and low of the week, and the high and low of the day. And if you know what both are doing, and you have indicators to help with that, of course.
Right.
But if you know the structure, like we shared earlier, then you have a advantage.
Yeah.
But if you just if a trader just willy-nilly says, well, I got a 5 alarm or something like that, well, it might be good, but if you don't know your high and low of the week and the day and even the session,
right.
Well, you know, you're gambling.
Yeah.
So I like this because what I'm trying to say is I like it, number one. Number two, it gives you structure.
Right.
And you know, okay, if you have a high of the day and it's pulling away from the high of the day, you're not going to take an up trade even on a little bit of a
or bump up.
Fake out or something. Yeah, exactly. So I just want to throw out that it's solid trading. It's actually fundamental, but it's structure, and I love it. I really do. I think you did a great job. in your presentation, and I'd like to personally thank you.
You're welcome.
But, it's very good. High and low of the day and the week.
I've looked at your past presentations on the 1551 and the 4 hour and 30, and I said, wow, that really works on the filter.
Yeah.
But I'm not patient enough, I guess. I need to know technically where I stand.
Yeah.
Not rely on my filter, on my what do you call it? These things over here, indicators. And that's why I got into the order block and things like that. I need to understand how the market actually worked. Once I understood that, or I'm in the process of understanding that, it's become a little easier.
Yeah.
To take entries where I'm supposed to take entries, not where I take. Like I won't take an entry here based on this break. I would wait for a pullback into somewhere into this area, like an order block. In this case, I would have missed it. But I can always drop it down to a lower time frame and see if there's an order block that hits and then take it.
Drilling down, yeah.
Yeah. But at least from this, I know I'm looking for a high.
Exactly.
Somewhere in here. And if I drop it to the 5, here's the 5. I draw my order block here, it hit it right there. And boom, there's my entry. And it's still a 20 pip, or I can say this is the swing point and say it's 14 pips. There's my entries here. It's at the top, actually, the entry. So there's my entry. Let's bring it in here. Here's my stop. Go back to the 1 hour. And this is my trade. 187 pips. And along the way, I can do add-ons. This is an important concept to understand of order blocks, but it takes a while. It's not intuitive. This system itself, by itself, is very intuitive. So if I dropped it down to the 5, and said, okay, here's my entry, everything lined up. It's not that far from the order block anyway. I missed 5 to 10 pips, I don't care. I'm making 180 pips. What do I care about 5 to 10 pips? You see what I'm saying?
Yes.
150 pips. And there's no sweat. There is some sweat, but and then again today, here's the entry. Even on the 1 hour, here's the entry. Here's the exit, 100 pips. Well, I would rather that people understand this system on a basic level, get comfortable with the entries, then explore other technical ways to get in, like the order blocks or simplicity or anything else you've been using. I could put the 3 and 5 filter on this and just see a high of the day and just straight from there. That would work too. But the main idea, like you said, Ken, and Santiago has been drilling into me too, is to get the idea of the high of the day, the establishment of the high of the day. And I just go down to the 5 to define my entry. My trade is still on the 1. Make sense?
Yes.
Now, what Santiago wants, what Rafael wants to do is weekly, or you can do a swing trade. Then you can look at the weekly. But you'll have a lot of swings in the weekly. Here's the weekly. Where does it sync up?
Excuse me, Raj, I need to leave, but thank you so much, and I'll listen to the rest of the replay. Have a good day.
You too.
Thank you
for attending. So my entry is over here on the weekly, right here.
Yeah.
I have a very high stop loss on this. Obviously, it's the weekly. You go to the weekly, Let me mark the entry. I don't have my filters on this, but I just took this and got out over here.
Yeah.
It's 243 pips in a week.
Right.
So, I mean, if you're in luck to get in over here and go all the way up here, it's like 2,000 pips. That's over a month and a half. Wow. I don't want to trade that long.
No, I don't have patience.
Yeah. I don't want to hold on to freaking trade for a month and a half. So
already,
yeah.
For me, let it like 4 or 5 hours too much.
Yeah. Anyway, so any other questions I can answer? I do use these arrows, by the way. They're very helpful for me because I know where my daily trend is. I just do the 4 hour match and then I come in here, see, confirm high of the day. And that gets me in.
Good.
And that's the only reason why I have this on my, this is where the daily turns. The arrow is established right there and the changes color in the daily. So visually also, if I can't see the arrow like here, I know the daily is turned. I'm waiting for the 4 hour to turn. Okay.
Perfect. Thank you, Rajat.
All right. I guess that is it. No other questions. We're done.
I think there's not any other question.
I don't think there's any other question.
No.
Okay. All right, guys. Have a good day.
You too. Bye.
Lesson training for you guys.
You too. Thank you. Bye.
All right.